Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board here, we had somewhat of a positive day, but I'm going to show you why that's a little bit of a nuanced statement there. So Dow, S&P, and the Nasdaq here closed in the green. We had the Russell coming off just a little bit. We had the gold actually catching a bit of a bid towards the end of the day. Same thing with the bonds and the crude settling off. So we're going to see all of this on the charts. But as always here, taking a look and starting off our analysis with the S&P 500s on a daily chart. So folks, as we move over to the S&P 500, it's very clear here that there's an area of resistance right above the 2300 whole number. We've had a few attempts up at those levels, still having some trouble breaking out above them. So here's what I'm going to be looking for, and actually here's one nuance that I noticed here today is something that we call like a stalling day. So a stalling day is just a very nuanced way or an appearance of sellers in the market. You're still a positive close, you're still in the green, or in this case a blue day, but because of how you were higher in the day and then closed at the lows and you had a pickup in volume, it somewhat indicates that there's some sellers in that area that were trying to unload a position, and that's why the market kind of got rejected or denied off of upper levels. So even though it's a blue day per se or a positive day, it is somewhat of just a hidden sign that there could be some sellers in this region. And again, too many of these selling days and you start to put an uptrend under pressure or potentially shift an uptrend into a full-on correction. So just be cognizant that we are starting to see some selling up here near the 2300 whole number. As we move over to the intradays here, there's that 2300, right? Very clear that you need to take that out to continue this uptrend higher. Very important that we do so. And then look, it's very clear here as well, if you're looking at support levels, the places that you've got to hold. So very clear to me that now you've got these 2290s here. We talked about the prior day 2270s down below because of these prior lows. 2260s, that's a good one right there, and then 2230s. So ultimately here, folks, I kind of put it in this perspective. This is very short-term support here, 2290s. If you break down below it, I wouldn't be too concerned with the uptrend. You start getting it down to like the 2270s or even the 2260s. Now it's like, okay, something's not right. And then folks, if you look at these 2230s on a daily chart, right, 2230s would be down here. That's very evident that something's wrong with the uptrend if you were to get down to those levels. So this is why, folks, ladies and gentlemen, when you look at support and resistance, it helps you with your market analysis. It makes it much easier to cut all of the noise out there, the people who say we're going to be at Dow 30,000 by the end of the year and people who say we're going to be at Dow 600 by the end of the year. You can cut all of that out and just take every day one step at a time because you're able to see how the market is responding at critical support levels. So those would be the places I'm watching down below, and obviously to the upside, any break above 2300s, you're probably going to have a whole crop of breakouts start to happen if that were to occur on the S&Ps. Let's move over to the Nasdaq here. Nasdaq also having somewhat of a stalling day, so volume did increase on the day. And again, we still see that this is where the relative strength is appearing. One of the things I was mentioning to our trading room today is throughout the day here, as we see on the Nasdaq, even though it closed positive on the day, most of the bigger cap stocks were leading the charge here throughout the day. So the Amazon, the Apple here leading the charge early on in the day, even like the Alphabet or Google leading the charge. And so that actually masked some of the weakness that we saw in the Nasdaq. Some of the smaller cap Nasdaq stocks were kind of fading off throughout the day, but the strength in the FANG stocks, right, the Facebook, the Apple, Netflix, and Google, which is now Alphabet, the G, those really pulled the Nasdaq up and put it into positive territory. So this is where we're seeing still that relative strength emerging versus the S&P is in the Nasdaq stocks. But again, we're seeing signs of just a little slight bit of selling here, some stalling action is what we call it on these highs on the indices. Let's move over to the commodities here. The bonds here creeping up to these 125s. So very interesting here. If you kind of zoom out of this chart, we've had this huge sell-off, and then over the last about 3 months or so, we've been banging our heads against these 125s, and every time we do so, it seems like there's sellers that come in and push it back down. Well, here we are right back at these 125s, and I find it interesting that if you potentially could break above this, that could be a signal that whatever situation is out there that the investors are trying to weigh and comprehend, it's causing them to move into a little bit more of a safer asset, the 10-year treasuries. So that's what's causing the underlying bid and pushing the prices up in the bonds. I'm just watching that. That's actually an interesting development, especially in a rising interest rate environment. Taking a look at the gold contract here as well. Gold, we saw a huge sell-off, and then just as big of a sell-off, he just 180 turned the other way. And we're watching the first turns of this, and we're saying, hey, down here at the 1170s, that could be an attempt up at the 1200s. Once we hit the 1200s, we were talking about that I expected a balance to form, like a range in that area. That's exactly what happened here. We went from the 1220s down to the 1180s or so, bounced around there, hit your highs right around these 1220s. 1, 2, 3, 4 times, finally broke out, and now you're moving up to the 1230s. Folks, this seems like it might be an attempt up at the 1250s. That was that prior support area that we breached back in early November. We broke down below those 1250s. That could be an attempt here up to test those levels again. And then finally here on the crude contract, we had that offer building into the crude, but no directional tell, right? And as I'd mentioned, we've been going sideways now for a good 3 months in this crude, going back and forth between the 54s and the 51s. So no real tell unless we can either take out the highs or the lows, the outer extremes of that balance. And real quick here, folks, no real breakouts. We actually took a few trades that didn't end up breaking out. We just cut them loose by the end of the day. But it's a very important thing to kind of, I think, consider that even though the markets were somewhat flat today, if you take a look at the S&Ps, right? S&Ps were somewhat flat, actually down, if you can tell from the morning trade. Yet some of the stocks that we've been holding in our swing trades have continued to do very well. Here's one of those examples here, this EXEL, moving from about the $20 level all the way up to almost the 2090s on the day before backing off. And this is just an example of why we look at stocks that have relative strength, because they tend to outperform here because somebody is trying to accumulate this. So who knows what happens to these stocks, but this is our game plan no matter what the market's doing, right? We're looking for the highest quality stocks, relative strength, right? Breaking out of chart patterns, which are cup and handles or double bottoms, and on volume. Those are the things we're looking for day in, day out. Folks, I hope that you're finding these stocks as well when you're trading. And just wishing everyone a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that Show More right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.